Namaskar. Pre-budget consultations have been underway to get a wide perspective from different sections of society since all are stakeholders in the union budget exercise. But some would argue that industry, they are the most widely affected stakeholders in a budget exercise since they are a large chunk of the entrepreneurial class in the country and can play a big role in stimulating growth and employment, given, of course, a favorable ecosystem to do so. But what is that ecosystem and what are their reasonable expectations from industry, that is? Let's find out with Chandrajit Banerjee. He's the Director General of the Confederation of Indian Industry. Mr. Banerjee, thank you very much for being with us.
Thank you. As good to see you always. Thank you very much.
But what is your take then on GDP growth for the current fiscal at the FY25, given the first half, the GDP numbers that we've had?
See, the way we look at it from industry, that growth is picking up, growth will pick up, and it'll be driven it has to be driven increasingly by consumer spending. Especially, we should see that in the rural area as the inflation moderates. And agriculture output, we see improving with favorable monsoon, which is pretty much there. So we expect urban demand also to firm up now, and as we have seen, in the very recent past, we have through that in our meetings, from the feedback that we see from the industry and our own research estimates, we expect the economy growing easily in the range of 6.8 or 7, if one can say, for FY25, which is pretty much in line with the consensus estimate. And we have some very strong growth drivers, and we will look forward to seeing that. But of course, there are certain challenging downsides in terms of the global uncertainties that we see, tight monetary conditions.
Indeed, but the high GDP growth in the last 3 years, it's been bolstered, by the strong public capex that we've seen. The capex has been high. What about the private capex, some would ask? Will it pick up pace?
So, this has been a question which has been around for quite some time. There are some sectors which are doing well, which have started investing, fresh investments from the private sector, if one can see renewable energy, say, for instance, electronics, many others actually. And even in our surveys or when we are talking to companies, we are seeing that about, if you really look at a dipstick survey that we did about a few hundred companies, some of the largest of the companies have started expanding or rather investing afresh. And more than around approximately, I would think about 80% of people viewing the present economic environment pretty much okay in terms of capacity utilization, etc., for their private investment to increase. Right. So I would think that the private investments going forward, bolstered, as you said very rightly, that the public capex must continue. The private capex will definitely pick up.
What incentives then is the private sector expecting for them to boost investment from the budget?
So many, of course, as you said in your opening remarks, there are so much to think about in the budget. One of the things that, as we have entered a phase now, and is in the last budget and even before, we've sort of been laying out the map of 2047 vision of Viksit Bharat. If you really look at holistically, and as we move on, and today becoming stronger and stronger economy, we would think that there would be need of a higher level of changes that we bring in. I'll be specific. Say, for instance, you get into the industrial or the investment and the foreign trade, the three policies. We need to see how we can look at them together. So expert groups which under our Honorable Minister, which could be constituted for industry and others to participate and draft out these sort of more of an integrated policy which takes care of industrial investment as well as trade. That's one. India has really, secondly, if I can, India has really moved on in the chain of ease of doing business, but we have always much more to do. So, rationalization, simplification, decriminalization of regulations. I would think these are some things where we would need to see a next level, and especially next level coming a lot from the state level, the single window system, which has been a great intervention. But we would need to see how we are able to see both the center and the states for new units as existing units, as well as units existing, the existing businesses on the
Okay.
systems to be there. There could be a lot. Labor is something. Labor codes rolling
Sure.
out. It's an easy thing to do. So quite many. One can
Quite a
one can.
large, quite a large wish list. But do you know how have corporates actually been performing across sectors?
When we look at some of the important sectors which really drive the economy, I would think that the corporate performance across some critical sectors, and in our case, we've been in our research seen 14 very important sectors: capital goods, say for instance, consumer durables, logistics. They have done very well, and they have all posted double-digit growth in net sales in the second quarter. Even if you really look into the consumer durables, you see FMCG sales, say for instance, that's grown 5.5+%, 5.7 odd in terms of value terms in the second quarter of FY25. That's higher than 3.5% in the previous quarter. So FMCG sales growth, which really indicates rural areas, have been higher, and that in urban areas and the three consecutive quarters now, that has been also pretty much good. And even if you look at the performance of the automobile sales, that has been a mixed sort of a bag, if one can say, this year.
Right.
And passenger cars have recorded a little bit of a slow growth of 0.9. But compared to the 7.6 of the earlier year, but two-wheelers, have expanded at sort of a healthy rate, if I may say. So there are sectors which are doing well.
So clearly the consumption demand is there. But the government will need to boost growth, and there's a resource gap, as we know. So what's industry's view on fiscal discipline?
So, I would think that what you said just at the end, we need to focus on growth. I think growth has got to be the main driver as far as economy is concerned. And I would think that the budget has to focus on growth. And government has done remarkable commitment, of course, as you also alluded to just now, on fiscal prudence. It has stuck to its strong fiscal steep glide path. I would think that that faster fiscal consolidation, faster fiscal consolidation, so to say, at this point in time, could have some negative effects on growth. So I would not look at it that way. Hence, for the next year, keeping the fiscal deficit around 4.5 is fine. And our strong idea is to see that debt anchoring,
Yes.
which we have been a strong proponent of that. And so we would really strongly suggest the government could lay down the glide path and bring down the debt to GDP ratio over a period of time, say 2030, 31. So while we announce the glide path, keep focusing on growth and keep focusing, and that would, I think, keep the sovereign rating, on an upward trend.
So you did mention that consumption demand is good in some sectors, but it's been lackluster elsewhere, one would think, right? So what would you recommend the government do to boost demand?
Yes, consumption demand has been an issue, definitely. We have seen that, and we've seen that the entire trend actually on consumption demand change since COVID. So we would really look at some critical areas. One, of course, the government's consideration in our forthcoming budget on reducing excise duty on fuel. Fuel is really an universal input, and cut in excise duty, we strongly feel will reduce inflation, put more money in the hands of people, boost consumption. Second, the personal income tax. We've talked about it, and we need to see. I mean, today the high spending group is really those who are considered of an income of say 20 lakhs per annum. So I think that would really help trigger virtuous cycle of consumption, higher growth, higher tax revenue also. So we need to see some strong relaxation at that point, at that category. The third, of course, is the minimum wages. If that we can, as was been suggested by the expert committee on fixing the national minimum wages, if we look at really changing that upwards from 267 existing to 375, that itself will be good. And lastly, I would think the government could also, look at providing consumption vouchers to the lower income group. And those vouchers could be designed to spend on designated areas, specific type of goods, which could be stipulated time period, 6 to 8 months to ensure spending. And they can be done through the criteria that can be defined as Jan Dhan account holders who are not beneficiaries of other welfare schemes. So these are areas where you can quickly trigger the consumption demand, which we spoke about.
Indeed. And, a country India's size, however many jobs are created by industry or elsewhere, it doesn't seem to be enough. It seems inadequate because we have just such a large population. So employment-linked incentive, ELI scheme, there's the internships, there's the gig economy proposals. What more can be done actually to boost employment?
One of the things where employment will really come from, I strongly believe, is the small, the medium, and the micro enterprises. They are the ones who are going to really open up more for employment. That's where they need more people. Others would find it, more of more automated in the manufacturing side, I would think. So the largest, being the largest employment generation, the small sector, we should see how we can facilitate our MSMEs with and help them move. Less compliances, less regulations, less procedures, upgrading schemes like the Udyam registration portal into sort of a single one platform, registration, compliances, and all that. The other is really the continuance of the ECLGS. That's going to be very important for all sectors, since the scheme has been extremely successful, and that has provided actually MSME with some of very critical source of credit, which is important. The second very important point is the national, employment policy, integrated national employment policy. We should, if that could be considered launching, and that policy could subsume under itself all the employment generating schemes, and that itself could be a very, very important way to start. I mean, post employment. I'll give a third point, which is targeted sort of interventions which could be taken for high employment generation sectors. And there are huge opportunities. Say, for instance, tourism is a big sector. Moving to services. I spoke about manufacturing. Yes. Make visa free entry, into India, excepting for a negative list of countries. It's a huge potential. Everybody wants to see India. So, and tourism itself will be boosted. And again, we have opportunities today in manufacturing sectors like the labor-oriented sectors like garments, textiles, which also creates a lot of women employment getting generated. I see a huge number of opportunities in creation of employment as we grow.
Sure. Mr. Banerjee, climate change is affecting industry, isn't it? Productivity. We know what the adversity is and what it creates, but, are there any opportunities? What about them?
Yes, indeed. Climate change is affecting each and every individual in the world, but then we have huge opportunities. Today, some of these schemes that India has done, and India can actually lead very, very strongly with opportunities. Say, for instance, we've seen opportunities coming up in solar and wind, hydroelectric power. One of the biggest things that we have seen is to, while it improves our lives, is this entire movement on green buildings, green products. Another third area is transportation, and there we are seeing, I mean, looking at the type of investment opportunities in areas of green hydrogen or transportation system itself, the last mile connectivity, the buses, public transport. A huge opportunity there, which can. And I think the opportunities can also be a lot for our farmers community if we look at climate resilient practices. And these are technologies which are Indian technologies, which can be of great value. So very quickly, these could be some of the points.
Now, the IEA, the International Energy Agency, it reports that fossil fuel consumption is going to be increasing in 2025. Some believe that carbon trading is a fair practice to legitimize fossil fuels for the long term. What kind of policy is industry looking at?
So, this is an important point. Actually, sort of a phased transition to cleaner energy sources is something that, which would allow industries to adapt and invest in new technologies. That should be very critical. And I think, secondly, implementing a sort of a robust Indian carbon market mechanism, which could be launched during the course of the year with energy-intensive sector. For the energy-intensive sector, that itself is a very important thing. And I would think strengthening of energy efficiency standards for industries, even buildings, and reducing energy consumption could be a very important focus area. I'd like to touch upon one last point on that is encouraging green finance.
Right.
That's going to support industries in transitioning from low carbon pathways to through green bonds and ESG investors.
Okay, green bonds. Now, when we look at states, we see that Maharashtra, Tamil Nadu, Karnataka, Gujarat, now Uttar Pradesh too, they are among India's most productive states. So, is industry also invested in taking growth across, the length and breadth of the country to other states?
One of the biggest changes that we have seen in India, and I do also believe that the next story of India's success would be largely driven by the states of India. So this through competitive federalism, we think states today do compete on seeing how they can get better environment to attract investments. So states are doing it, and as states do that more, there will be different types of opportunities in different states. In certain states, there will be opportunities on a specific type of manufacturing. States which are exposed to, say, solar, etc., the sun would get much of solar investment. States which have huge potential on tourism, and if we can build investment, the tourism infrastructure, industry itself can participate in those development of those infrastructure. There will be tourism related investment. So I think it will move, not just only through CSR initiatives, but by making states more attractive based on the competitive advantage that they might give, and I think and each of them that I mentioned, be it tourism, be it garmenting, be it areas like where we look at high intensive skills, say for instance in inviting GCCs into those states, etc., itself will lead to a lot to an all-round development of the state.
Okay, Mr. Banerjee, India is expected to be the third largest economy in the world in the course of time, but there is a trade gap, we know. What can be done, to boost exports?
See, exports, one of the biggest issues, of course, today there is the global challenges that we face. I mean, we can't just put everything onto how we can, but there are global challenges. We will have to keep very strong sort of and understanding as to how the global economic trends and global equations, geoeconomics emerge over a period of time. But one of the things that we have been doing, as we have seen the country do, is to really look at how it has very well chosen FTAs with some countries and or some regions. And I think that expediting some of them would be a very important area. The second, I would think that we should deepen our engagement with global value chains by looking at a sort of a three-tier customs tariff structure over a period of time. A timeline could be announced. So that itself will make us competitive, build our own supply chains here. And lastly, I would think that interest equalization scheme, which came up, which sort of has come to an end in June 2024, that was extended for non-MSMEs till December 24. That scheme, I would think, should be extended by a few more years, maybe 3 years for manufacturing exporters. That will tremendously help us compete in the global market.
Mr. Banerjee, the strength of the dollar is affecting India's valuations in dollar terms. I mean, the rupee investments are looking relatively smaller now. What is the ideal value of the rupee that industry is looking at?
No, that's a billion-dollar question, if I may say. But that is, but most seriously, we are a country which is growing fast, which has the potential to grow very fast. We will be an importing country. We will have to import and we will export. But however, while deciding the value of the rupee, there are many considerations, and I would think RBI would have to continue to manage the volatility that we see in the rupee value.
So a final question, Mr. Banerjee, what's highest on industry's wish list, if I have to ask you?
So highest in the industry's growth list is to see how we can, on the day the budget gets presented, we are able to say that this is a budget focused on growth, and I think growth will really take care of employment. Growth will take care of many of the areas that we spoke about. So if it is a growth-oriented budget, growth-focused budget, that's what we would look at this time.
Okay, we leave it there. Thank you very much, Mr. Chandrajit Banerjee. Thank you very much for joining us and giving us industry's wish list. And we can see that industry's wish list includes pumping up of demand, consumption demand. Clearly, the supply side needs the demand side first. That's probably what we've learned from this interview. That's all we have on this pre-budget interview. Thank you very much for watching. Namaskar.